So tonight we're going to cover current tax laws, some of the deductions and credits that are available, changes that are expected in 2026. And then I've also been getting a lot of questions. Does it make sense to maybe move to a different state to save taxes? The current tax law is called the Tax Cuts and Jobs Act. It is scheduled to expire or sunset after 2025. The tax law is progressive, so that means that the first dollars that you earn are not taxed, and the last dollars that you earn are taxed at the highest rate. The Tax Cuts and Jobs Act shrank the dollars that are not taxed at the beginning, but then lowered the amount of tax on those last earned dollars. So let's look at an example of current tax law and what we expect the tax law to revert back to in 2026. So today they will be using the standard deduction, which means that their taxable income would be $170,800. Effective rate is 15.6, and those last tax dollars are taxed at 22%. So your deduction is close to being the same, but then we tack on those personal exemptions for a household of four, means that your taxable income is actually going to be quite a bit less, under 150,000. Your effective rate is higher, but you have fewer dollars that are actually taxed, and that last dollar is being taxed at 25%. Estimated payments are broken into 4 quarters: April 15th, June 15th, September 15th, and January 15th. So this is a little bit more detail as far as how much do you have to pay in estimated payments to avoid a penalty. There are 3 tests. You can either pay 100% of last year's tax liability. So this is not going to be if you owed money at the end of the year, if you got a refund. This is going to be the total tax liability. So it doesn't matter how much was withheld. If you earned $100,000 last year and your tax bill was $9,000, you had $10,000 withheld, you get a $1,000 refund. You have to have had at least that $9,000 withheld this year to avoid a penalty. So whichever one is going to work for you, if you meet one of these tests, you've met all of them. So, but that is how you avoid that interest penalty. So as we're talking about, should I move because of taxes? This is kind of where I'd like to start. The states in green do not tax retirement income. So a few of these states do not have income tax at all. A number of them do not tax pensions, IRA withdrawals, 401k withdrawals, basically any kind of a retirement account. There's not going to be taxes on that as income in all of these states that are highlighted in green. So does it make sense to move there? Well, there are a lot of other factors when it comes to cost of living. Talking about property tax. The red states here have the highest property tax rate in the country. The state with the highest property tax rate overall is Illinois, our neighbors to the south. Illinois is very unique. Cook County is the reason that their property tax is the highest in the country. Chicago and the surrounding suburbs drive up the entire state. If you live in the south or the west part of Illinois, property tax is actually pretty average. But if you are in the Chicago area, that is the reason why the entire state pays the most in property tax. The lowest property tax rates actually are mostly out west. States in green here are going to be the lowest. Surprising that Hawaii is also on this list, but this is where you're going to save the most. Where is it the most expensive to buy a house? So this is the highest home values per square foot. Kind of not surprising, California is on that list. Hawaii is also there. Florida, usually nicer weather. States with the lowest home value, so where you get the most bang for your buck, a little bit in the Midwest, and then the South. So the number of homes for sale in the entire country right now is around 1 million homes. So these numbers were effective the end of June this year. And the staggering thing is that 1 out of every 3 homes for sale in the state of Texas or the state of Florida right now. What this tells me is that if there's going to be a housing bubble, I don't think it's going to be national, but I think it could be regional. Florida and Texas are the 2 areas that will be affected the most. Texas is actually overbuilt. They have more new homes for sale than existing homes. They just have more inventory than what they probably should at this point. Florida is a completely different animal right now. Vast majority of these homes are existing homes that are for sale, and it's difficult to find buyers in Florida because of the need for property insurance if you have a mortgage. So if we compare Dane County versus Florida, the housing market in Dane County, Wisconsin in general, but Dane County specifically, is still extremely healthy. Most homes are selling very quickly at asking or even above. Whereas in Florida, part of the issue, again, goes back to that homeowners insurance. If you're not a cash buyer, you have to have homeowners insurance, and it's very difficult to secure. So speaking of those higher property insurance rates, most of the country is very, very average. Average $300,000 home, $1,900 to insure that property across the board. All the states in blue are plus or minus just a few percentage points off of that. The states in green are the outliers. It shouldn't come as a surprise. Nebraska, Kansas, Oklahoma, that's Tornado Alley. Then we look at Florida. Florida is 5 to 20 times higher than the national average, depending upon how close you are to the coastline. If you are beachfront, it could actually be more than 20 times higher than the national average. There are some $300,000 homes that cost $20,000 a year in insurance that are beachfront property. I don't know what beachfront property is $300,000, but those were the stats that I was able to find. The last thing that we're going to talk about is going to be sales tax. There are a few states that don't charge that extra 5-6%. Those are the ones in green here. So you've got New Hampshire, Delaware, Alaska, Montana, and Oregon. But what is average, or what is a high sales tax? So the states in red are going to have a state sales tax with 6% or higher. This is going to be the statewide. Now, Wisconsin's statewide sales tax is 5%. But a lot of places you go will charge 5.5%. So if we look at that, some of these states have more than 8% sales tax in their highly populated areas. Going to pick on Cook County again, Chicago, they're close to 12, 13, 14%. Again, a lot of factors go into, are we saving money by relocating? Does it make sense to move to save money on taxes? Short answer, not really. Am I saying to avoid any state in particular? No. If you want to live somewhere because you have family there, you love the weather, you love a certain area, go for it. But should we flee Wisconsin because we have a little bit higher income tax? Not really. You're not saving much if you go somewhere else. Probably not a definitive answer of, hey, does it make sense to move to anywhere specific? But again, have a better reason than tax savings or expense savings.